Nuvama, in fact, has come out with a very interesting note saying there's a lot of value there and a lot of value is yet to be created. It's just not that it's already run up. Alok Deshpande, Executive Director at Nuvama Institutional Equities, is here with us to talk more about that. Alok, thanks for your time. I was looking at your report and we are chatting up after a very, very long time. So good to see you. Tell us, why do you think there's a compelling case to look at the small and mid caps? Because they have done reasonably well in the last couple of months, if I'll say 3 to 4 months, they've shot up 50 to 60% in certain cases. And you are saying that a big move is actually which lies ahead.
Yes. Yeah. Good morning, Ajay. See, if you just take a step back and look at, how small and mid caps did in 2020 and 21, obviously we all know there was a big outperformance versus large caps. But 22 and now half of 23, generally, the outperformance has sort of flattened out, right? And in fact, small cap index has actually underperformed Nifty by almost close to 20%. What we have put out in our note is that yes, we are probably not at the bottom in terms of where valuation starts to then rally, etc. But we are more than halfway through that underperformance journey. Okay, so what we are suggesting to investors is one should start to look at select stocks, and probably in 2 or 3 quarters time we will reach a point where it will be a time to go all out on small and mid cap. So our call here is we are sort of halfway there, or more than halfway there. And the idea is to now start looking at stocks which have been beaten down, etc. So that's the call that we have put out in this recent note.
This is Anisha also joining into the conversation. I was going through your model portfolio and I got intrigued by a couple of re-rating candidates that you point out. Federal Bank as well as Sterling and Wilson. Could you talk to us about what's the thesis there and what kind of upside do you envisage on these names?
So in terms of Sterling and Wilson or Federal Bank for that matter, these are our what we bucket as value picks. In both cases, you will see that the valuations are significantly below some of the peers that are there. And generally what we expect is, some of the triggers to play out. Like for example, in the case of Sterling and Wilson, there are quite a few, orders, etc., that are piled up. So that should play through over FY24 and 25. Similarly, in the case of Federal Bank, the asset quality, etc., are improving. So and compared to that, we haven't seen that kind of trigger playing out in terms of the valuations. So those are our value picks, and you'll find some other similar names in that value bucket that we have put out in the model portfolio. But mainly these are not necessarily buy and hold stocks, what we put out in value bucket, but these are stocks where some sort of impending trigger is there, and that trigger can play out over the next 12 to 6 to 12 months probably.
Also figures in that list. Now this one is seeing intense selling by some of the players in the market. On the one hand, on the other hand, regulatory changes also kind of hit their business model temporarily. Do you think it's the valuation now? How attractive do you see the valuation of Max?
You're talking about Max, Ajay? Or?
Max Financials, yes.
Yeah. So again, the reason why it features in terms of in our value bucket is, obviously we are expecting that at some point of time over the next 12, 18 months, Axis will buy that incremental share in Max Insurance, and then the whole play here is eventually when Max Insurance itself gets listed, then that value will get unleashed. So after the regulatory headwinds that came through, what you mentioned, I think this is one stock which is not really recovered after that, and if you look at some of the other stocks in the insurance sector, they have actually recovered, not fully, but at least some partial recovery has happened. So again, it's a play where we are banking on a certain trigger, in this case a corporate action, to play through, and we really see those valuations to be very attractive here.
Alok, I also see a stock like Macrotech Developer in your list. Why are you preferring Macrotech over the other names, let's say Sobha, Prestige, Brigade, etc. Of the world?
No, I think it's we keep rotating between some of these stocks also within a particular sector. In the past, we have had Brigade and Sova in our portfolios. The reason why Sobha and Brigade were there earlier in our portfolio was, the IT sector was going through a very large kind of boom, and obviously these companies have very reasonable exposure to IT hubs, like probably Bangalore or Gurgaon or Hyderabad. Now, the reason why we have Macrotech now, as I said, we want to play a much broader real estate play here, in terms of where we think that the interest rates might have peaked out. So the idea was to go from slightly more IT centric to a slightly broader play here. So that was the only reason.
Phoenix Mills, ever since Phoenix has, spelled out their strategy of going deeper in tier 2, tier 3, and new malls have actually been coming up. Ahmedabad was a recent inauguration. The stock hasn't done too much. The previous high was closer to 1600 odd. How do you see the numbers panning in the next 1 or 2 years? What's the trigger you see there?
I think numbers should be good, and also do remember it along with the other stocks in the real estate space. It was also this stock which got affected by the whole interest rate hike cycle. So the reason why again Phoenix Mills features in this list is, again, we wanted something which was a much broader play. Again, in this case, on the urban mall kind of side of it. But we wanted to go away from real estate stocks which are leveraged to one sector. So again, Phoenix fits that bill, and hence it features in this list.
You have a lot of exposure to building materials, whether it's in terms of Polycab, KEI, even Supreme Industries, Prince Pipes, etc. What's the top bet if you had to pick one stock?
I think at this point of time, it has to be Polycab. Just to put some context to it, all these names that you mentioned, if you see this list, you will see that most of them are market leaders in their respective categories. So we have this anchor framework for this product, which revolves a lot around category leadership or market leadership, and that's the reason why most of these names are featuring here. But Polycab, I would say that between the 3-4 names that you mentioned, I would say that it features as our top pick here. Reason being, obviously, great execution, what they have delivered over the last 4 quarters, but also if you look at the general cycle in terms of how it's playing out in terms of private capex, how it's playing in terms of power capex, etc. So it will be a beneficiary of that. Plus, there is this option value of their consumer electrical division, which is currently not making any money. But over the next 2 or 3 years, if that is to turn profitable and deliver maybe 8-10% margin, that is really a big kicker that will come, which I really don't think that the market is fully factoring in. So that would be our top pick here.
Right. All right, Alok. Thanks very much. Good report. We'll discuss some of the interesting stocks on Swadesh also one of these days. But good to drop by today. Time for a short break. When we come back, more interesting buzzing managements to discuss. Don't go anywhere.